General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. Tuesday, the 10th. We expanded. I kind of want to call it manipulation, but we only ran one side. We didn't ran both sides. We did expansion. It's an engaged day. And confidence is medium. Reason conditions confirmed. Anchor point. Possibly Tuesday. Okay, this closed out candle. It could be Tuesday. No. Tuesday. Took Monday high and closed below, but tomorrow is CPI. So we won't be sure until that plays out. No, a terminus wasn't hit today. So we're saying this low should hold to continue bullish. This is like 3 drops. This flat bottom does look interesting as a target now. Now that we didn't close and we took out these 2 highs Friday and Monday. I'm gonna really have to watch this area now though. The old week opening gap that held price last week. Let's just give it a something like this. Just coming back through here. It's a pretty wide area too. Oh, 3 drives pattern. Took out Friday and Monday high. We haven't created a new lower high yet, but if we do, I think the flat bottom will be a good retracement target. Okay. Price did not come back down this way. Can take this off. Previous week's high still looks doable here. I think this is like an old target that I hit. Nah. Here at least, and then I'll watch. Yeah. And then we can get a reaction here. So come down here, pair with this block, and then keep going higher. And CPI comes in bad. Month over month. Here we go lower. Previous week's high is still major. I saw liquidity pool, but we don't have to hit it. We can get faked out. daily. What was that? There we go. Can we hit this? This gap is also very interesting too. Looks like going to hold for CPI. NFP didn't do anything, so be aware. CPI could be tricky. Also, war news and watch oil. Kind of the same thing here. Took out Friday and Monday. Slow day after a large range day is expected. No follow through after we took out the highs. Makes me think we at least need a retracement before continuation. Yeah. Let's take this off and take off the target. Both targets got hit. CPI, I think lower off for news, especially Doji. Yeah, we're just gonna hold. And we're at 50%. You know how we always consolidate at 50%. It's like fair value. 50% of the data ranges. Waiting, CPI data. Framework, yo. Um, Good reading. CPI. I think that's that on that. All right, y'all have a good day. Peace.